All right, perfect. Let's get it started. Let's do a breakdown right here for the week. And this is also going to be a more advanced breakdown because we have gone over candle size entries actually, and we have not gone over that before. So we could argue that the spring enrollment is now more advanced than the previous advanced sections. So that's quite funny. But right here, if we first go over the dollar as well, and as well, of course, incorporating everything that we learned. So if we see a certain setup, then we are going to go into the lower time frame as well to see how we can get involved and if we could have gotten involved. It's important to do a quick reminder as well from my side, of course. The higher time frame and the analyst phase is so much more important than the entry. And yes, of course, the entry is actually how we are getting towards that making profits, etc. But the entries, they can be so easy. As in, it's just simply at a certain moment in time, and it's me exaggerating, of course. At a certain moment in time, it just becomes buying or selling, clicking that button, then placing the stop loss at the right position, and that's it. The analyst phase is so much more important, and that's always a good reminder to have. So the breakdowns, I would always focus on the analyst phase more than actually diving into the lower time frame to see how can I catch this move. If it's not clear how you can catch a certain move, then likely there's just not an entry. That's very dangerous as well if we move on towards the trading plan and we actually have a trading plan set. If we now study moves that we did not get involved in, then we are just getting into that shiny object syndrome that we need to catch every move. That's just extremely dangerous. So be careful with that as well. Now, on the dollar, let's break this down from the beginning. We open up with this week right here. And we mentioned we have no resistance anymore until we reach that high right there. It's the first swing high. After that, I would argue we also don't really have any resistance anymore towards this high right there. So we can just keep on going higher right there. Of course, we have to monitor if we actually run or sweep that swing high right there. So what do we want to do? Do we want to keep going higher or do we want to sweep it to continue lower a little bit? But it's important to understand that at the beginning of the week, we can already deliver towards that high without worrying too much about that weekly value gap right there. Then on the daily, what do we see? We open up on that Monday, and on that Monday, we already reach into that swing high right there. Now, the ideal scenario is we create a daily value gap exactly overlapping with that swing high right there. Does it need to happen? No, it doesn't need to happen exactly like that. But as soon as we don't create a fair value gap at all, then it becomes suspicious. We should ideally have some form of fair value gap sitting right there. So right now, we do not create any fair value gap. This right here is suspicious to me. With NFP approaching as well on Friday, so most likely weird or consolidating price action could already happen right there. So what are we aiming for right here? Well, right now, since we have reached a certain context target right there, we can, and the only discount area we have sitting right there is still this fair value gap, which we can then potentially reach back into since we are sweeping a high. So the way I want you to view that is when you have a breakaway gap, the breakaway gap is only a breakaway gap for a certain moment in time, most of the time, unless you create a breakaway gap with a fair value area that's all the way down here, for example. Yes, this is most likely going to be a breakaway gap for a very long time and might be a breakaway gap forever, unless the dollar starts to become bearish. But other than that, breakaway gaps are usually a breakaway gap until we reach a drawn liquidity, and then that drawn liquidity is the catalyzer to then trade back into it. So it's premium to discount rate, discount to premium. It's a ping pong effect again. So right here, if we want to continue higher, then we have this weekly value gap, where in the meantime, we could potentially trade towards it. I was not super interested myself in trading towards it right there because we did have NFP right there approaching on Friday as well. So for me, it's sacrificing 1 week of price action right here to potentially get a clear drawn liquidity again next week and the weeks after that. So how can we potentially get a clear drawn liquidity here again? Well, we have this daily value gap right now, which we can push lower from, and we have this weekly value gap, which we can push higher from. That's a 50-50 area. So here, I would still want to wait. Now it's monitoring the 2 candle rejection right here. So we have the 2 candle rejection. We have 1 rejection right there, and we have 1 rejection low right there as well. If we take out either this low or that high, that is perfect. And then we have to monitor, do we run that high or do we sweep the high or the low? And we can already see potentially once we start to trade towards that high, how we can get an earlier indication is 4-hour fair value gaps. So if the 4-hour wants to continue lower, it will most likely already create fair value gaps going lower right there. If it does not want to do that, then we might create 4-hour fair value gaps right there to already target that high. Early indication that we might already want to continue higher instead. So that is exactly what my view will be as well. For the indices right here, if we take a look at Russell, let's remove everything as well. Then Russell, we reached the context high right there for the weekly. So we moved from that weekly fair value gap at the bottom right there towards that context high. Once we take a context high, again, we need to be careful because ideally we want new context. Same on the dollar, we want new context. We want to get a clear view of what it wants to do again. So that's where we have this daily fair value gap potentially, which we can continue higher off of right there. Now, the first close right there is a very low close. It's not necessarily a bad thing because again, we can then sweep that previous day low sitting right there to then continue higher off of that. Does not happen. So on the lower time frame, what happens right there? We're already seeing signs that we are actually running that low, which means that we on the 4-hour, on the 1-hour, etc., we might have fair value gaps right there already overlapping with that low. We already continue lower in that sense. So we don't need to wait for the daily candle close to confidently say that we are running that low. No, we can already see that quite early by just understanding what that sweep of liquidity looks like on the lower time frame as well, with that retracing those steps. Now, that leads to the understanding eventually of creating as well a third candle right here. And a smaller detail again, quite funny, since we have been doing a deep work session on that, is this. We are running into resistance right there, and that creates a third candle. And thus, we do indeed trade back into that fair value gap. If we didn't have the resistance, similar to the dollar right there, then we already run towards the drawn liquidity instead. No resistance, we already run with a third candle, and we can already look to continue higher instead, and then potentially retrace back into it. But here we make that retracement first before we continue lower, which is small little detail, quite interesting as well. See if we had anything on the lower time frame right there. Did we have anything interesting? This is not during the right time. That is during Asia session. For me, indices, I always want to wait for equities open ideally, or again that 8:30 rule. But around that time, I do not want to trade in London session for indices. If that is the case and you do want to trade London, I would always refer to DAX right there. Then right here, this is where it gets interesting after the fact as well, right there. Now, I mainly want to go over the other forex pairs as well. And I want to look at something interesting right here on YM. Because on YM, let's take a look at this. And if there's any question regarding this week's video for the spring roll, then please do let me know. Right here, we have this daily value gap eventually created after a sweep of this high. So what actually happens right here? Let's also break this down. We retrace back into this fair value area right there. We have the 2 candle rejection. So we have the first candle, not necessarily rejecting. Second candle is the rejection. Well, we could argue that's also not really a rejection, but we are sweeping that previous day low right there. After that, we have an up candle. Okay, we get the rejection. We can look to continue higher right now, where the context high, we mark that out clearly, this context high right there is the target. As soon as we reach that context high right there, what do we see? We get a first sign of a potential sweep right there, a big sign of a sweep. Then this shows that this fair value area is not actually willing to follow through right here. And we get a potential sweep where the first target is this, but not only this low, because afterwards these lows also become the target. Why? Because this is the fair value area. And since we are not offering fair value anymore, we are more than likely seeking that liquidity right there. So based on the other indices, this was a little bit more confusing, a little bit more hard to read, in my opinion, of course, because the other indices might have still had some bullish tendencies as well. But right here on YM, it was quite interesting. Looking at this fair value area, we also looked at during the live session right there. On the 4-hour, we already had right there a beautiful candle size rejection. So even on the 4-hour, if you're not too certain if YM right here wants to continue lower based on that first candle, even though that's already a big rejection, that's no problem because you wait for that fair value gap potential to be disrespected. Perfect. We can simply enter based on this candle instead to then continue lower off of that. which still targeting that low would have been a very nice 1 to 2 as well. Now going into the lower time frame, let's see if we compare the candle size entry to an order flow entry. We had something regarding a setup right there. The daily value gap, 15-minute ST plus re, ideally 15-minute ST right there, where we first failed to continue lower right there. If we're being picky, if we're being mechanical, if we're being extremely objective, yes, we have a setup right there. Now, why would this not be a great setup to me? If we are potentially sweeping a low and not running a low whilst we are creating a re-setup, I do not necessarily like that. Especially with a third candle like that, that would again lead me to think that we might just want to sweep this high and then continue lower instead. So that's still important, still an important understanding when we're talking about setups as well and the resetups. So I want to see that run versus sweep very clearly. Then if we do want to continue higher, right there, we have this value gap. Now, why do I all of a sudden say if we do want to continue higher? Because that keeps me in that neutral state where I can monitor both sides very clearly right here. If we want to continue higher, we should continue higher right now off of this fair value gap right there. We have the 2 candle rejection failing. Is that an automatic bearish entry right now? No. But what can we do? When we create a new fair value gap continuing lower right there, or even expansion phase candle, it's more advanced. So if you're struggling with that expansion phase candle, then I would advise just wait for a new fair value gap. And that in itself can already be an entry. Now this, for example, for me would be a perfectly fine entry right there to actually look to target lower with a 1 to 2. We have no resistance anymore towards the lows. The context right there, perfectly fine. We can target that and afterwards target those lows as well. So that would have been a more difficult entry, not your usual perfectly fine textbook ST plus re, but still a good setup in my opinion. Let's see. When it comes to 2 candle rejection, candle size entries, if price sweeps the previous candle's low, does that second candle need to close bullish or is it sufficient as long as the rejection candle is a long bottom wick? Yeah, I think there's 2 options right there. So either the wick is very small at the bottom for a bullish candle size entry and we still have a bullish candle, that would be sufficient to me. Depending on if it creates a fair value going against us, then I would still want to wait for another rejection. So that third candle essentially. But if the second option right there, if there is not a bullish candle, but there's a long bottom at the wick, then that's still perfectly fine to me as well. So there's no need for it to close bullish in a sense. And it's a good question actually. There's no always need for a candle to close bullish or bearish. That makes sense. For an entry ST plus re, do we need that the re must be confirmed with rejection and after that waiting for new fair value gap and after we enter in this new fair value gap? So the thing we want to see with a re is essentially we want to wait for the ST. We have the ST area. The ST area has its premium raise on its own right there. Then once we create that ST area right there, that's where we now want to wait for a rejection indeed. And then wait for a new fair value gap, lower, yes. And then we enter in that new fair value gap, or we enter on the overlapping part, or we enter of the creation of the new fair value gap. So that's what we go over in the order flow entry video, where that's personal preference, but it's also if price, it depends on the context. There's quite a lot of things going into it. So I would advise to go over that video where we discuss that. But you are indeed correct. Yes, for sure. All right, let's see. So if price comes to the fair value gap at the end of the week, Thursday and Friday, then we expect 2 candle rejection next week, or we only wait for 1 candle rejection. If price comes to the fair value gap at the end of the week, Thursday and Friday, then we expect 2 next week. Yeah, I personally, and for the 2 candle rejection that we've gone over thus far, is just simply the candle size entry. So you can get very creative with it yourself as well, if you do not necessarily want to go over my trading plans. But for a trading plan that I have developed as well, if on the dollar right here, we come into that late during the week, I personally would want a little bit extra confirmation. So either we get the next candle right there being a bullish up candle right there, targeting that next high, that's perfectly fine for me to enter. Because then I can confidently say, all right, we most likely want to target that high as well. But at the end of the week, I do want to be a little bit more careful right here with a new entry as well. Either a very short entry, meaning short in the time duration, where I can see this entry being a good entry, but only if you do take into account that fair value gap, so going break even fast and not letting it run for forever, because that's quite unreasonable unless you are break even. But then break even, you need to be careful with as well weekend holding. So if that makes sense. On gold, would that 1 hour rejection of the fair value gap be the entry or the candle after? Let's see. On gold, what are we dealing with? On gold, would the 1 hour rejection of the fair value gap be the entry or the candle after? Which 1 hour fair value gap are we talking about here? This one? This one, I believe, right? Let's look at this earlier, actually. This right here would have been a potential loss right there on 2 candle rejection. So this for me would still be a good 2 candle rejection right here. Actually, would it have been loss? I say that, but we did already take out context right there at the highs. So at that moment in time, this most likely would have been a break even instead. And that's the advantage you have with candle signs entries right here. Well, advantage, I say advantage, but I've been noticing it's been helping a lot. Where once you take out the context, again, we want to be break even right there. And that small wick takes out the context. So my mouse, please, not really working with me. If we go with a 1 hour entry, all right here, this 1 hour value gap. This 1 hour value gap for me, that first candle is already a perfectly fine entry. So this candle right here is already a perfect entry for me if we're talking about candle signs. And the next candle, if you want to use it as more confirmation, yes, you can do that. Now the advantage again is as well that we have, if we do want to enter off of this candle, we don't have to place our stop loss all the way below that swing low. So that helps. But that first rejection, this is already a really significant rejection. And that rejection is huge right there, where even the stop loss could be placed just below the fair value gap for me. And that is refining the stop loss. But you oftentimes see that when prices are a huge rejection like that, there's no reason for it to come all the way back towards the original PRA right there. And that leads to the understanding as well. If we do that, then it's just simply low probability. If that makes sense. So let's go over a few higher time frame things right here on Australian dollar, US dollar, EU, etc. as well. Where this is extremely 50-50 price action for me right there at the beginning of the week already. And I want to retrace the steps again. I think that's very beneficial because seeing a consolidation before it actually happens is a huge skill, especially if you're a trend trader. So most of us are mainly trend traders, meaning we are reliant on some form of a trend. We're reliant on somewhat of a discount rate pushing higher or premium rate pushing lower. So it could also be, of course, a con in our trading plan, as in it's not the best thing, but it's easier to trade and it's higher probability to trade than consolidating conditions. So right here, if we retrace the steps, then first of all, we get a huge tracement right there into this daily order block right there, which we can continue lower from. So nothing is crazy just yet. Then that creates context as well towards this swing low right there. Now that's where it gets interesting, because this context right here, there's no resistance anymore. We already are really close towards the actual drawn liquidity right there. And before we reach that drawn liquidity, what do we see? We create a daily value gap right there with a huge retracement going higher to then potentially continue lower. Now, if we compare this a little bit earlier with Russell as well, this is where Russell created a daily value gap actually at a resistance area. So it makes sense still to create that retracement right there, create the daily value gap to then continue lower off that, to then target lower right there. Where Australian dollar, US dollar didn't really have a retracement right there to actually continue lower from. It doesn't make a lot of sense. In an ideal world, what we should have done is we should have already continued lower. This low should have been taken to then create a daily value gap. That's higher probability. Why is that higher probability? Well, if we look at this from more intention, there's more bearish intention when that happens. Where if we create a value gap before we take that low, there's more bullish intention in the market. There's that pushing battle again. Someone is trying to push it lower, someone is trying to push it higher. If we push lower significantly, creating a bearish trend, then we will create fair value gaps after we take out certain swing lows as well. So After that, perfect. We can wait for more confirmation on the 4-hour to create new fair value gaps, continue lower. And we can see we are really struggling to push lower right there, create new fair value gaps. Now we have this small fair value gap right there. Okay, potentially we can push lower from that. Perfect, we do that. After we push lower and we take the context low right there, then what do we see? We now see, again, similar, that we are potentially sweeping that low right there and not actually running that low. So this is where we create a sharp turn where it actually becomes very suspicious. So all those signs, they lead me to think, okay, I do not want to trade any fair value gap right here. This is why it's so important to understand. The analyst month is, again, arguably the most important month when it comes to the trading technicals. And the reason for that is because understanding which PD rate is actually a good PD rate to trade off of, which pair is actually good to trade, is way more important than looking for an entry. Because the entry is the last line, as in the entry is the last thing we need to do before we actually dive into the trade. It's the least relevant thing in that sense. Now, this is why any fair value gap that we are about to take a trade here on Australian dollar US dollar is just simply low probability in my eyes. And that's why I would not want to trade Australian dollar US dollar right here. Then if we take a look at Euro US dollar right here as well, Euro US dollar was looking quite interesting, and a quite important aspect as well is we have this weekly value gap right there, which again to me is a breakaway gap, and we can first continue lower. So we first have this previous week low, and we also have this swing low a little bit lower. You see, there it is, this swing low a little bit lower right there. So we can deliver towards that. Now, the suspicious thing that happens right here is that we do not create a daily value gap lower at this moment in time, which if we already want to continue lower right here, then this 4-hour value gap that we actually see a little bit earlier, it wants to load, it would be lovely. Perfect. This 4-hour value gap right there that we create, we should ideally already continue lower somewhat off of that. If we do not continue lower off that, we should just consolidate. As in, that means we are most likely waiting for the next day volatility, or we are waiting for that daily fair value gap instead. But what do we see? We do not create a new 4-hour value gap lower right there off of that. And then we get huge intention actually going higher. Now that makes it suspicious. When we now do not create any new daily fair value gap lower right there, that makes it very suspicious. Can we still continue lower off of this fair value area? Yes, potentially. But what do we see? First candle rejection right there. Perfect. Second candle rejection is an up candle. Long wick at the bottom. Okay, that's a bit suspicious. Then after, we do not really continue higher anymore, lower anymore. And we just push higher, and the intention is just bullish right there. Which again, then the weekly fair value gap becomes the overall drawn liquidity. It's important to understand right here why this move also happened. And of course, everything that happened right there is as well because of the dollar. Because the dollar took that high right there. That's why we're seeing that price action on EU, on GU right there. And that's why we're seeing every Forex major being affected right here. Let's see, Arjoio on ES on Friday, there was a sweep on liquidity. On Thursday, he made a very fast price manipulation. My question is, now the target is the high of 0424. I think we will see the answer in the candle daily on Monday based on 2 candle rejection. Let's see. Let's see if I understood that correctly. We had this weekly value gap right there going against us. And I say going against us because I was mainly focused on lower prices. But that weekly value gap, since we got the rejection quite nicely off of that, on that Thursday, I was expecting a little bit higher prices. So I was not necessarily expecting this rejection that we see actually right there. Let's see, right there. Then, let's see, on Friday, there was a sweep on liquidity. There was a sweep on liquidity. And on Thursday, with very fast manipulation. My question is, now the target is a high. Yeah, it's a good question. So right here, for me, this is quite 50-50 at this moment in time still. And the reason for that is because we're still inside that weekly fair value gap, weekly order block right there. If this shows clear signs that it does not want to hold, and that Friday is not really a good sign that it does not want to hold, because in that Friday it tells me that we might actually want to be bullish right there for a little bit, where this right here could indeed be the target, and this potentially, like you mentioned as well, could also very well be the target right there. And the reason I say 50-50 is because we do come into this weekly value gap, weekly order block already the first time. And we already have a huge rejection going higher right there towards the daily value gap, which pushes price lower again. So on the lower time frame, that leads me to understand that we might be in consolidating price action. As in on both sides of the market, there's no fair value gap really following through anymore. So there's a little bit of seek and destroy in my opinion. So I want to be a little bit more careful right here. But if we talk about arguments, I also think that the argument is a little bit stronger, that we can definitely look to continue higher here for a little bit. Yes, for sure. At least until that high right there. After seeing how we reject above that high. That will be quite interesting. That will be interesting. Let's see. The context is also that it reached a higher time frame PD rate on the daily. Which one was that? Was that about EU? EU right there. For rejection, the second candle body should close above the first candle wick, high, low, to be valid. Yes, ideally, yes. That is, well, we could argue it's a general rule of thumb, but this is a very strong general rule of thumb. As in, if we reject that, then that is the case. Where if we look at, and the reason why that is because when we close below this high, for example, that's because then it shows a sweep on the lower time frame. That's actually sweeping. The same for this right there. It shows a sweep on the lower time frame. So yes, ideally yes, exactly. Yes, order block on the daily on EU, and on the 4 hour there's a fair value gap. On daily, right there. Yeah, interesting. On the left, yeah, the one on the left there, yeah. It's always a little bit tricky. It's also why I personally, whenever I'm already in a trade, I like to exit my trades a little bit before the low usually. And this is the reason mainly why. If that happens and you're already in a running trade on quite some highs right there, it's just unfortunate. Just unfortunate if you keep on holding that and it comes all the way back towards break even. But it's also mainly the reason why I do full take profit. And because I do full take profit, I like to get in it out before lows are actually reached, because I do not take partials. So I'm leaving too much on the table. This one right there. Interesting. The low where EU reacted is a monthly previous candle low. The fact the low not being ran and the daily just displaced higher could be stated that the daily is for an ST correct, and right now price is rejecting it. That's a really good logic. That is really good logic. So here on the monthly, let's see. On the monthly, we are indeed sweeping. Now the only thing that worries me a little bit, and that's due to the dollar being a little bit unclear, is that we are sweeping previous month's high and sweeping previous month's low. Whenever we have that, it's quite 50-50 usually. But when we sweep this previous month's low right there, and we do get a daily sharp turn, that is very nice as well. Where if we do want to continue higher and the dollar wants to continue lower, which we would have to see going into next week, I'm not too certain 100% just yet, then the target towards that high could again be quite interesting, or we're in an early stage potentially. So if we get the order flow continuation, could be very interesting, 100%. All right, can you look at Australian dollar, Canadian dollar? Took a long at 4 hour value on Friday, but news wiped me out. Let's see. At 4 hour value gap. Right here. Ooh. Right there. Let me get some context as well on why I had it already on the breakdown list as well. We move higher right there. What are we doing? Swinging at swing low potentially, continuing higher right there. We had this. It's very interesting. Very interesting. I do like that. Continuing higher towards that high right there. It's good. I like the higher time frame. That looks nice. So on the 4 hour, we can push higher from that 4 hour value gap. It's very nice. Good higher time frame. Let's see on the 15 minute, on the 5 minutes right here. 5 minutes. What are we doing? So get the order flow entry first before we dive into the candle signs entry. We have a sharp turn right there already. We have arguably a few reads after that as well. Quite interesting. Now we can definitely look to enter as well before London happens. And the reason wise because we have an Asia major right here. So if new support is supporting the ID, this is a very interesting price action right here. Now, after, this is just unfortunate. As in, I can't really make anything off of that. That is just unfortunate price action right there. The only thing we could have potentially done is already get out of the trade right there if we were already involved. But other than that, it's just very unfortunate right there. Which is a good entry. I do really like it. I do really like it. This is a good trade. I like the trade 100%. And if we were looking at a candle size entry, what would that look like? This is a good example as well of the, again, first candle does not reject right there. Second candle rejects. Now, this is where I would argue you can enter on this. And the reason you can potentially enter on this is if you want to go break even earlier, you can right there. Or you might get taken out right there. But then if you get taken out, you just monitor again of that fair value gap. If we want to continue lower, let's monitor the 2 candle rejection. Where here we are seeing, if we now want to continue lower, we have the rejection candle right there. So this in theory would be an entry. This is not an actual entry, but this in theory would be an entry. So right there, if we want to continue lower, now we should create down candles right here. And now what do? We create a new up candle, sweeping at low, then targeting that high right there. So this in itself is already, again, a new entry based on candle signs right there to then continue higher 1 to 2, 1 to 2, 1 to 3, sorry, to then target the high potentially, and to then go break even quite early again as well before we get this huge wick. Can you tell us if the ST on the daily EU is correct? The previous X low on the monthly is inferior PD rate, but is PD rate technical? Yes, it is actually correct. Yes, correct. So the daily ST that we have right there, that is a perfectly fine ST right there. Does that mean I want to trade it? Again, that's a different discussion. But a sharp turn, yes, it is a good sharp turn off a previous month's low as well. So yes, it is good. It's very good. I like it. I agree with that. I post that exact same idea on the EU trading floor to run towards the daily intermediate high. Could be interesting if dollar confirms lower price. 100%. 100%. If it does, and the dollar finally would be very refreshing, to be honest. If the dollar finally starts to do something like a major run, because higher time frame wise, we have been trading just simply said consolidating price action throughout this whole year. So thus far, of course. So makes it a little bit more difficult to trade as well, but it's very interesting. Very good to do some experience, to gain some experience as well. I'm Mr. Sorry, just joined. Sorry, no worries at all. No worries. That's why we record it. No worries. Is it good ST or bad because the price being consolidating as price has not reached the context area? Let's see. Let's look at this right here. What are we looking at? We have ST entry right there. Is it good ST or bad because price is consolidating as price has not reached the context area? So this price action before we do anything right here, this first ST right there is good. The re is good. After that, after we have weird signs, whilst we are getting closer as well towards the context low, that's odd. So this right here, I would not bet any money on lower prices anymore. That would be very suspicious to me. I would not like this anymore. So the ST at the beginning for me is all right. It's not a great ST. It's not a perfect ST. It's an all right ST. As in, we do not create a fair value gap immediately, but we do have clear fair value gaps to push lower from. After we get a good re as well, that's very nice. But this price action, once we start to fail to follow through, and we can see that right there a little bit earlier as well, where first we run lows quite confidently. After we start sweeping these lows right there, which makes it very suspicious. So here, that's where price action turns bad a little bit, if that makes sense. Let's see. Perfect. Let me see, where was I? Would you consider that they are trapping traders after taking out the March low and then going back above? Now anyone trapped on who took the breakout lower, their stops are above March 7th high. This can be now the draw on liquidity. This is good reasoning. That is really good reasoning. And you're looking at the 4 hour. Yeah, that's really good. That's really good. I like that a lot. And we can definitely see that. I'm very interested to see if we do want to continue higher, because we do have this fair value area right there, which we seem to be respecting right there. Failed to follow through on this 4 hour value gap. So yeah, it's still an early area, but if I have to just judge off of this price action right here, I would argue that we might want to continue higher instead of continuing lower instead. So your thought process is really good. I like it. I like it, Jason. Could you repeat the candle size entry again? I couldn't understand the candle size entry on Australian dollar, Canadian dollar. For sure. For sure. So, oh, no. Let me get the forex.com. Perfect. So right here there's multiple options. Let's put it this way. If we are going off of the first, the easy approach to get comfortable with the understanding of candle size, etc., then the first option would be this entry right there. It's already a significant rejection. Oftentimes when we have the time frames the same, so we have context area and the candle size entry is the same time frame, so 4 hour and 4 hour in this case, then first candle entry is oftentimes a good entry already. Whenever we go down in time frame, you oftentimes want to go over the second candle. Now right here, we can cover this low to then target this high, which is again, based on the 4 hour, that's still really good RR. After we reach that high, and it was after we reached that high right there, we get a huge wick lower right there, which would have not been very nice. And again, depending on the broker, really depends on what happened right there as well. But that is where I would ideally want to be break even already, or at least be out of the trade with NFP happening right there, or any other Canadian dollar, Australian dollar news. I'm not too certain if there was any. And that would be the first option. Afterwards, what are the other options? The other options are the following right here. We have this first candle not rejecting. So if the first candle does not reject, second candle can sweep the previous candle low right there to then reject. That is most likely to happen. If that does not happen, perfect, we can ignore the 4 hour value gap, and I'm not interested in that. Now right here, the only thing on why I personally would not necessarily want to enter this first candle or the second candle right there is because we have a fair value gap going against us. We can enter that if you're willing to risk maybe a little bit lower to then add a new position later on. But I would want to be break even or lower risk ideally, because if we still want to continue lower, then the area we will continue lower from is this fair value gap. So if we want to be really confident about a certain trade setup, then let's remove any ideas that we might get or any premium area where we can continue lower from. If we remove that from the conversation, then the only arguments we can make is to be bullish, which happens right here. Let's look at this. Same scenario, right? So I'm monitoring the 2 candle rejection. I'm using that for value gap right there. You can also use this, but it leads to the same understanding because they're very close to each other. We have this first candle right here, which is not a rejection. Actually, quite funny. Whilst that candle was forming, in the formation, we saw that it was actually rejecting lower, creating that low at the bottom right there, and creating a long wick at the bottom right there. Very interesting, but small little detail. Now right here, if we want to continue lower, that's not really a rejection in my eyes right there, simply because it's not a big wick at the top. We can still sweep that previous candle high right there to then continue lower, which is what we see right there. So that's perfect. This is a nice rejection, I would argue, where now I would want to see a down candle if we want to continue lower. We do not get that, and instead we get an up candle. So this right here is actually a new entry opportunity right now, because now we have overtaken that for value gap. 2 candle rejection is failing, so now we can look to continue higher instead to now target again comfortably those highs. So that would be the 2 candle rejection or the candle size entry for me. If that makes more sense. Hopefully that was a little bit more clear. Let's see. Can we have a video example on delirium order flow entry? Delirium 1 candle rejection, 2 candle flow order flow entry, 1 candle rejection, 2 candle rejection. Just to help a lot which one to use. Yeah, for delirium is never 2 candle rejection. Delirium is the name of a trading plan. So delirium is never going to be a candle science trading plan or candle science rejection trading plan. It's always going to be order flow. So flow, that depends on which one you choose, what kind of trading plan you use. But this is where we need to finish the spring round first before I can actually touch on this more in depth, because there's 2 types of trading plans. There is a filtering process trading plan, which delirium falls under. We have a flow trading plan, which is flow trading plans, as in that's one instrument, etc. So that's the 2 niches in a sense. And in that you have different trading plans as well. So are you using candle science in a filtering process trading plan or in a flow trading plan? And that really depends on what type of trading plan you want. So it really depends. The last advanced live session, is it located anywhere? I cannot find it. Ooh, I am not, it would have to be in the section for the live sessions, but I am not 100% certain if it is there. If it's not, then I might have forgotten to add it. So I will check after. Please remind me, or give Derek a heads up and he will also look into it already. I'm in love with candle signs. It's so amazing seeing it repeat the same principle over and over and over again. Yeah, me too. I love it. Love it. Love it. It's a very interesting way to view price action. Very advanced in my opinion. If you wanted to enter based on 2 candle rejection only, but at the lower time frame we see that the price is at a confirmed intermediate to high, intermediate to low, confirming your PD area, how would you tackle this? Let's see. If you wanted to enter based on 2 candle rejection only, but at the lower time frame we see the price had a confirming to your PD area, how would you tackle this? So, for example, let's see. Is it an example right here on Australian dollar, Canadian dollar, or is it just if it's yeah, that's a really good question. And the way I would want to, so if we have an intermediate high going against us, for example, if we're looking at bullish prices right here, then the way I would want to do that is I would want, again, potentially a new fair value gap. Instead of just a candle rejection, just having a new fair value gap as well. Just confirming the ID, again, that we want to continue higher, especially if that intermediate high is confirmed, and that would worry me a lot. If the intermediate high is confirmed at a premium array going against us at a resistance area, that would concern me. So then I would confirm it a little bit more through a fair value gap instead, if that makes sense. I'm confused which one to choose. Yeah, so it's not really about choosing. Yeah, it seems like you're a bit all over the place currently. So I would advise follow along with the spring enrollment only. And it seems by the looks of it, from the questions I also had, you were also watching the other enrollment, and that's why I don't want to say anything bad or anything, but that's why watching other enrollments whilst we are doing the spring enrollment can just be overwhelming, just confusing, because everything will be touched on in the spring enrollment alone. So if you follow along with the spring enrollment, just do those practices alone. It's going to be a lot more fruitful than watching the enrollments through the other ones. It's going to be very confusing. So what my advice would be is stick to the spring enrollment, follow along with the videos, because we've not gone over delirium and flow yet. And then from there, we can work towards a trading plan. Because with the candle signs, or with the candle signs entries and order flow entries, we actually, at the end of the candle signs video, the previous one, we touch on, all right, which one do you actually want to trade? Which one resonates with you? And from there, if you follow along with those steps, we can work towards a trading plan. If that makes sense. All right, can you give us another example for spotting S&D a little bit earlier, seek and destroy, as you explained before on Australian dollar, US dollar? Yeah, so essentially the easiest way to explain it is, well, is it the easiest way? I'm not too sure. But the way I like to see it is whenever we have something that is not supposed to happen, that's the easiest thing to see, seek, and destroy happening before it actually happens. So the first sign that does not line up with every textbook. So imagine we go over the concepts again, we go over order flow, we go over candle signs, we expect every perfect 2 candle rejection to hold, we expect every new fair value gap to create a new fair value gap. If that does not happen at any moment in time, then that becomes suspicious. So let's follow price action right here on Australian dollar, Canadian dollar. We have this fair value gap right there. That fair value gap does not follow through higher. All right, that's not too bad, because we still have this fair value area right there as well, which we can continue higher from. We have the 2 candle rejection right there. Perfect. We create a new fair value gap higher off that. Perfect. So we are just simply still bullish. Now we create this new fair value gap right there, which we can push higher from. We do not do that. Okay, not too crazy, because again, we still have this fair value area right there, which we can push higher from. Right here, we create a new fair value gap. Okay, again, nothing crazy just yet. We have a lot of momentum going against us, a little bit worrying, but nothing too crazy just yet. This new fair value gap, we come into it. 2 candle rejection is perfect. We do not create a new fair value gap higher off of that. As soon as something suspicious happens, that is not absolutely textbook trading, as in that is not in if we were just only to look at perfect examples of the concepts we use, then this would not be in the textbook right here. As soon as that happens and we do not create a new variable, that should ring alarm bells. From there on, it should we should monitor, are variables now holding? Are we still running hives? Are we still creating new variables? What are we doing? So everything after right here, when we sweep this high, we do not create a new variable, suspicious. When we have this variable lower, suspicious, because of all the things that happened before that already. Where this variable right now does not follow through, suspicious. This variable right now is also, again, not following through, not creating new variable immediately, suspicious. So that is seek and destroy, where we don't have to realize seek and destroy conditions until after it happened in hindsight. No, we can already retrace those steps by seeing what actually happened. When did we fail to create new variables? When did token and rejection not hold on both sides of the market as well? When do fair variables not hold anymore on both sides of the market? Things like that. So whenever it's not textbook anymore. This is one example, if that makes sense. In the NQ channel yesterday, 10 grown people were hyped when candles went up and down. That's passion. I love that. I love that. Yeah, sometimes when I hear myself talking in the D works, it sounds so funny to me. Where I'm getting so excited because because of, whoa, I found this no resistance area and we can already continue higher. It's very funny. Let's see. Yeah, delirium is correct. Delirium is a complete different plan. So delirium is not used for the one candle or two candle rejection. Exactly. Yeah. So for that, we have a complete different trading plan as well, which will as well, of course, be online. We have a few different trading plans coming up. Let's see. Oh, the spring enrollment. Aha, is the advanced section. Okay. I would have to check that. Can someone, if someone wants to ping Derek as well, then he will do it, or he will remind me to do it. So that will be nice. Let's see. All right, works needed to be done. Perfect. All right. I think for this